Hi everyone, welcome back to the podcast. I have Keshav with me. A couple of more metrics we're going to talk about today. What is it, Keshav?
So today I have came up with two fundamental things, sir. One is ROI and another one is market capitalization. So today first we are going to talk about ROI. ROI means return on investment. That is nothing but money earned relatively to the amount of money spent. That is known as ROI. If you want to calculate ROI, you have to use this formula. That is net profit by cost of investment. This is the formula for ROI. And the thing that I got confused is when I saw about ROI in Google. The first thing I saw is you told me so many times. First, see it is useful for investors, long-term investors or not. So I went and saw that is useful for long-term investor or not. Some websites said that is very important. Some website says that is not important. So I don't know whether we have to see ROI in a company or not, sir. What I know about ROI is, if we know ROI in a company, we can know the investment that are made by the company. We can know which investment is performing well and which is not performing. So we can allocate our investments on those companies. So that's why ROI is important, they said, sir. If the ROI is above around 10% or more, we can invest on that company. If it is down that line, we can't invest on that company. These are the things.
I'll tell you.
Okay, sir.
ROI is good at telling you one thing, is to give you an analysis of your own investment so far. So you start investing from here. Today is year zero for you. You start investing. So you don't check your portfolio. You've been investing. You only check your portfolio returns once a year. So next year, this time you log on. Right? Before that, you have done calculation. My goal is to reach 25 crores in the age of 60.
Okay, sir.
To reach 25 crores, I must have, in my investments, must give a return of, let's say, 10%, 12%, whatever percent.
Okay.
Right? So that's the average return your investment should give you. So now you know your goal, how you have to get there, your roadmap you know.
Correct, sir.
So now you made an investment for 1 year. So you open your portfolio. Then you look at the amount of money you put in each stock.
Okay, sir.
And you see the price, right? And you calculate the ROI for each one. You know the net profit, meaning the dividend, everything you add together. You get the net profit. You know the amount of money you put into it.
Yes,
you
sir.
multiply it by 100, it gives you a number. That's a percentage.
That
You
is-
see if that percentage is close to the percentage you need it to be. If that company is not getting close to that percentage, then you have to see why is that company, which you did so much research on, why is it not close to that? Is it something's only a blip, meaning is it only happening this year, some election year, or because of some interest rate cycle, it's gone down, but it will recover because you're investing for 20 years. It will recover. So maybe I wait for 1 more year and see.
Okay.
Or I made a wrong decision. This company has become a failure.
Okay, sir.
It is not growing at the rate I need it to grow. So then I pull it out. Then I reallocate the funds. So that's when you do your portfolio adjustment.
Understood, sir.
So that time it's useful.
Other than that,
Other than that, if I look at a company and someone says, Keshav, you should consider the company, the ROI in this company is very good. How will I be able to say anything? It's all past.
yes, sir.
Right? In the past, Keshav, when you were young, you were able to run 1 mile at very fast speed. Now I ask you to run that 1 mile. Keshav's ROI and that running mile speed was, let's say, so many miles per minute. Now I ask you to run,
down.
you'll be like, sir, I was young, sir. 10 years ago. Now what are you saying?
Understood, sir.
It's like that. So it cannot forecast what's going to happen. Nobody's an astrologer. There's no equation or figure which is going to tell you this is going to be doing good returns.
Okay.
That is based on
Past.
everything you have to look at.
Okay.
And you have to see how the whole sector you think is going to behave. Microeconomics, how is the business growing? Is it making sense? Who's running the business? All that you have to see.
Okay.
You just cannot see one ROI and say, okay, I'll invest.
Blankly invest on the company.
That's like looking at PE and investing. You understood?
Understood.
So that's where it's usefulness and not usefulness I've told you. That's why some say it is useful. It has helped you to evaluate your own investment. So let's say you want to compare your mutual funds against gold you've been investing. So you can see, same way you can calculate for gold. Amount of money you put inside gold. What is the price of gold today? The net profit divided. You can use this for anything. Real estate. It's just amount of money you made on an investment. Anything is an investment. You can even buy a limited edition Sachin Tendulkar bat. He bought it for 1,000 rupees. Today it's worth at 4,000 rupees. Then you can say, okay, the return of investment is so much.
Understood, sir.
Understood?
Yes, sir.
That is the only point of ROI.
Okay, sir. Sir, the next thing we are going to talk about is market capitalization, sir. The first thing that in a company, what we see is market capitalization. How much that is having market cap is how much, like that we will see. First of all, I'm going to tell you how to calculate the market capitalization. If you want to calculate the market capitalization, you have to use this formula. Current market price by total number of outstanding shares. In outstanding shares, that does not include promoter or owner holding shares. It only includes stockholders, investors, and public holding shares. That's all.
Traded shares.
Trading shares. That are all the shares only included on that. So if you want to use this formula, use like this. And I will give an example of market capitalization, sir. Let's assume there are 3 banks. I'm having around 10,000 rupees in my hands. I'm going to invest that 10,000 rupees in one of the banks. So I'm going to see what the first thing I will see is which bank will give me more interest. That is the first thing I will see on a bank if I am going to put an FD on a bank. So after that, I have to see is the bank having the enough market cap. If the bank gets default or something, will it pay me back or not? So I have to see the market capitalization. That's
no,
not, sir.
That's like book value, man.
Okay.
So let's say, and this is checking. Promoters holding is included in market capitalization. Total outstanding shares is all legal shares, including promoter, traded, everything put together.
Oh.
Okay, inclusion of all shares put together is market capitalization. This means net worth.
Okay, sir.
Right. So, and when you talk about market capitalization, it is only used for one thing, which is to decide what if it is a big company, small company, or a medium company. Kind of tells you how big the company is, how much money it's got.
Okay.
So if it's got a lot of money, it's a big company. It's not going to disappear overnight. It's going to take a lot for it to disappear overnight.
Oh, okay, sir.
Like I say, too big to fail.
But the website I used, what they told us, market capitalization is a thing which if a company gets dissolved or collapsed,
that is book value.
They can pay you back.
Yeah, no, that is book value. So that is the amount of money per share, the value of per share.
Yes, sir.
So, and the way the rule is, let's say a company goes bankrupt.
Okay.
The shareholder is the last to get the money.
Correct, sir.
First, all the people who they borrowed money from, those guys have to be paid. Next, all the people who are holding that company's bond will be paid. Okay, or everybody's paid. Finally, if there's any money left,
that will be given to the investors.
Yeah. And all likelihood, in the way Indian companies are run, there will be nothing left. It'll be like Anil Ambani standing in court and saying, I am bankrupt, sir.
I didn't have anything.
I am bankrupt. It's all my wife's money, sir. My son's money. Not my money, my lord. And you'll be standing holding your ticket and saying, cha.
Understood.
So,
yes, sir.
Market capitalization is, that's what the main thing is. It shows you the size of the company.
Okay,
and everyone was talking about the Indian Railway stock, no? That IRFC.
IRFC.
That has shot up, and because the price has shot up, its market capitalization has gone through the roof. So imagine it was 30 rupees times outstanding share. Now you're multiplying by a factor of 4 or 5. So it's gone up. So it's like suddenly Keshav's value is shot up through the roof. Market capitalization tells you how big the company is. So like you saw the railway company, it's market capitalization. So the worth of the company is overnight huge.
So it doesn't have anything to do with...
Yeah, and usually in the other calculation you were saying, market capitalization will tell you how much money you get back. Usually when a company is going bankrupt, you'll see the share price tanking.
Correct,
sir. So when you multiply, now Anil Ambani's company share price is traded 0. So 0 times whatever share you have is 0. So what will you do then? How does that help you?
Understood, sir.
Correct. So market capitalization, like PE, like dividend yield, fluctuates every day.
Okay, sir.
Because you're multiplying it into current market price.
Current market price.
So depending on the price of that day, the market cap keeps moving.
Understood, sir.
Okay.
Yeah.
And as an investor, if you're seeing dramatic changes in your company's market capitalization, you should be nervous.
Okay. We should be aware of that.
Yeah. Because that means there must be a reason for it. Otherwise, that's why everyone's asking, why is the railway stocks going through the roof.
Yes, sir.
They won't understand. So when I tell them budget, interim budget, there'll be a lot of people saying, no, that is something more is there. Okay. People can push up a price by speculating. And even when you want them, like IPO, Anand wants, SEBI is even now investigating about mules which are being used to inflate IPO prices. You tell people, no matter what, people will believe what they want to believe. Till they burn their hands. Then they'll hate everybody after that.
Understood, sir.
Chalo.
Yes, sir.
I hope you guys found this video informative and entertaining as always. And we'll see you in the next one soon. Bye.
Bye.